afternoon, everybody. Welcome to TraderMerlin Show. It is your Wednesday Hump Day edition. Some exciting stuff today. Of course, we're going to have Larry up here in just a moment. But for the week, as you guys know, we had no show on Monday. We're going to have a show tomorrow and on Friday. So don't worry, we're not going to shortchange you on the shows this week. If you have a topic that you want to discuss, something that you're interested in, just email me at TraderMerlin@gmail.com or put it down below any of the YouTube videos, and we will go from there. All right. So here is the topic du jour. As you can see here, I've got a nice picture of Larry. It says the new portfolio edition with Dr. Larry Jacobson for our 925th show. And we have, over the years, we've seen a lot of different additions to this long-term portfolio that Larry is building. And a lot of it is done based off of fundamental analysis. So it'd be kind of interesting today to see exactly A, what company it is that he's interested in, and B, what's the methodology? What's that process of looking into it and some of the rules behind holding that investment for the longer term versus something like a short-term day trade. So joining me from the great state of Indiana, we got Dr. Larry Jacobson. How you doing, Larry?
Good, Merlin. How are you?
Great, man. Good to have you back on. You're now becoming my most recent host. I actually went to change all the names and everything, and you were the last guest, so perfect. Makes it easy for me.
Well, the check's not in the mail yet, but I'm still...
That's it. I'll Venmo you. I'll get that digital money. Anything new with you over the past couple weeks? I don't know when the last time you were on, maybe a month ago. Any news?
Yeah, no, I'm just preparing. I'm going to do a couple of classes online. I'm going to be basically back in California doing a couple of classes at the end of July. So it's going to be pretty exciting. I've been out here in the Midwest for a few months now and getting used to the seasons. And first thing especially is when you hear frogs for the first time at night, I'm like, who's running machinery at 9 o'clock at night? It's just kind of...
You're quiet out there, you damn frogs.
Yeah, I'm not used to that. So I'm getting used to country life. It's almost like reverse Green Acres.
Love it. All right. So as many viewers know, you've got this long-standing portfolio. I remember back in 2015, you came on Power Trading Radio, and we were talking about Nvidia when it was down at $30. And when it hit 60, I told you to get out, and here we are. Split adjusted as of June 10th, if it goes forward to that split, your average price will be 78 cents for 100 and what? $40 stock probably at that point. Very nice. And you've had a lot of different ones in there. Some have been done very well. Some have not done well. We'll talk about that here in a little bit. But what's the latest edition? What are we going to be looking at today?
Well, before I just jump into it, what I wanted to just kind of share with everybody is, this started years and years ago. I was given the opportunity to fly down to Atlanta, meet somebody who had the opportunity to study with somebody who studied with Buffett. It's like one of those Kevin Bacon type things. And I was just interested in wanting to learn how to do this better and learn how I can identify some of these stocks. And so you and I decided many, many years ago for educational purposes, we were just going to put a portfolio together and see if all this stuff worked. And believe it or not, the very first one, as you mentioned, was Nvidia. And so we've had things along the lines of Nvidia. We've gotten Shopify early. The latest one that came online was Texas Roadhouse, which has been doing much better. But to your point, even like I mentioned on the show with you a couple of weeks ago, I believe, almost a month ago, because that was when the Berkshire meeting was, even Warren Buffett, took a huge loss on Paramount because the strategy, and I kind of follow a similar rule, my minimum hold time is going to be 3 years. So even though it might seem weird for certain people, and I know you really were pounding me on Nvidia all those years ago, the rule was I got to stay in this for at least 3 years or longer, and after the 3 years, I'll go back and reevaluate it. But it's a little bit different than somebody who's just doing regular investing, who's going to be timing the markets. Mm-hmm. So the goal here is to really find things that look like they're really good from a standpoint of potential in terms of competitive advantage. I also am looking at not just what can happen in a year, but anywhere from 5 to 10 years from now, will this company be relevant? And I can tell you that you've seen this over the years. I've even changed a little bit of my thought process. Like, for example, I'm not going to really include many Chinese companies anymore. I don't find they work too well. I don't really like biotech. So every once in a while, I hear you say, like, I'm never going to trade Apple. And so I've kind of put some rules in there as well, too. You learn as you go along. And as you mentioned, what I try to do is always find something and, for educational purposes only. And it's fun because I get to call you and go, hey, I think I found something new.
Right.
What is it? And then we kind of say, hey, let's just share it. But again, I want to be very clear that I'm not doing this for recommendations. I'm not doing this to try to suggest people should be buying or selling it. It's just an opportunity to take a look at a company and go, wow, this one looks like something that has some potential. So with that said,
and applying a set of rules. Hold on, before you jump into it, I want to like piggyback off this a little bit, because this is a question that Tom sent in, which was, well, you've had some good winners, but you've also had a lot of losers in there, and I think it's important in any trading plan. So for everybody here, your account should have parameters. These are the rules that I follow for this account. And some of yours might be, short-term day trading. Some of you might be swing trading. Some might be long-term investments, 401k, IRA type of stuff. Each one of those should have parameters. And I think it's important to note that for Larry, when he does this analysis, it's saying, I'm looking at a 3-year time horizon. So I'm analyzing these fundamentals, and based off the numbers as of today, it looks maybe undervalued, overvalued, whatever, and then I can make my decision off of that. Over the course of time, we all know that things change, right? It might be at a period of time when markets are, driven off of hype and there's overvaluations, like some feel with Nvidia. There comes that reevaluation process. And while, there's a lot in that portfolio that we're down, that 3-year window is not up. And, let's take one, for example. You've got a few in here, but let's just go to something like, what was it? SEDG, right? So SEDG, down like 40%. What Larry will do is, and I'm assuming this is what I think based off your conversations, you'll look at this one in your time window. Okay, I'm going to do an evaluation of it. And if it does look bad, okay, fine. The numbers have changed. I'll lick my wounds, cut it off, and move on. If the numbers still look good, if those valuations still look tasty, you'll maybe add to that position, correct?
Yeah, and in fact, I'll tell you exactly the reason why Solar Edge kind of made that list. You and I were talking about this years ago, before Biden got into office, and Biden was all about green energy. Remember that?
Mm-hmm.
And so going in and starting to do some analysis, Solar Edge was a undervalued stock. So it had a great run for a while, and now it's pulling back. So for me, I'll hold it at least 3 years, maybe even a little bit longer, to your point. And then I go back and I do my reevaluation again. If it doesn't look that good and it's lost more than 50%, then I'm probably going to cut it out. But at this point, you got to look at it. It was something that Charlie Munger once said, Merlin, that was really fascinating. He was interviewed and he said to the reporter, he said, look, Warren and I really weren't that smart. He said, if it weren't for 4 or 5 really killer trades that we did, we'd be average. Yeah. So that's the key thing here, is when you're doing the long play and you have a very diverse portfolio, some things are going to do well, some things are not going to do well. So I don't really look at it in a particular box or period of time. What I'll be looking at it is overall and saying, is this something I still want to own? But again, to your point, it ebbs and flows because you have sectors and different things going on.
Mm-hmm.
And again, the fundamentals could still look fantastic. In fact, one of the ones that this one reminds me of that we're going to talk about today is one that you teased me relentlessly about many, many years ago, which was Trade Desk.
I don't know if I tease you relentlessly about that one. The one that I tease you about relentlessly, and I still hate, I think it's the worst company, Live Nation. I hope that the federal government comes down on them, slaps antitrust, and shuts that company down. They are a fraud, scam. Oh, I can't stand them.
I know how you feel about it, but what I mean by teasing was it wasn't moving. It was like a year and a half it didn't move, and then all of a sudden it just exploded. And now, crazy enough, and I'm looking at my stats here, it was June 1st of 2017, and it actually split 10 for 1. So when it was first bought, it was around $50 a share. So was Spotify around that time. Mm-hmm. All those kind of stocks were there. But at 6/16/2021, it had a 10 for 1 split. So now it's a $5 stock that's up 1,623%. So that's kind of the game in this world of value investing. Is there's 2 different ways to play it. One is the Benjamin Graham way, which Buffett used to play, and he actually got burnt. I mean, the funny story of all this is the name of his company was his biggest blunder he ever did, which was Berkshire Hathaway Textile Company.
Mm-hmm. All right.
And it was Charlie Munger, and it's fascinating, we talked about this a couple of weeks back, that Munger was kind of the architect of the Berkshire Hathaway we know today. Because what Warren used to do, he'd follow Ben Graham's advice. He'd find a company that was undervalued. As soon as it got back to fair value or where it should be trading at, he sold it. And what Munger said to Buffett, which really kind of changed everything, and Warren said this several times, he said, Warren, you're just crazy. Why are you so fascinated on getting an okay company at a really decent fair price getting great company at a somewhat okay price than rather getting an okay, really good company at not so good a price.
Mm-hmm.
And as soon as he said that to Buffett, it started making sense. Be in this for the long haul. Buy a good company, not just because it's cheap, but because there's potential in this. So something like you mentioned with Solar Edge, we've started to see some issues starting to little kind of chinks in the armor right now, especially what's been going on with, let's say, lithium batteries and all of a sudden EVs. We're starting to see a whole bunch of issues starting to happen where now people are maybe second guessing the fact that maybe we won't go green. You can't predict what's going to be here or not going to be here. All you can do is kind of say, do you think there'll be a future? Do you think this company will be relevant? And if it's a good company and all the fundamentals are there, it's what Benjamin Graham once said, sometimes the stock price is broken, not the company.
Yeah.
So, go ahead.
It's interesting because I have the same a similar approach with my cryptocurrency portfolios. I had 39 positions, barring the ones that got lost because of Celsius. And out of that portfolio, I'm looking at fundamentals from the sense of what are they doing, how are they doing it, teams and things like that. And, over the next 10 years, it's my hope and belief that several of those 39, let's say 5, become the Amazons. And I might have 10 that just kind of meh, and maybe I end up having, 25 or 20 that end up losing money and going down. That's part of the risk I'm willing to take. I'll make an investment, and if it does go down and those disappear, it's a chance, a risk I'm willing to take for the long-term potential grand slam. And when you look at the couple you mentioned, particularly the Nvidia, that's beyond a grand slam that offsets. I think if you were to look at the actual percentage dollar gain, the Nvidia gain alone would offset every single losing position in your portfolio that you have on that portfolio, right?
Easily. And what's really interesting was that the reason I liked it initially, look, I don't have a crystal ball like anybody else. Like, you had to even educate me on some things that started to happen. The whole reason that Nvidia got on my radar when it did was that the chairman of Nvidia, who's still there, who's doing very successfully, said, we want to be the premier chip maker for driverless cars. So we're going back to 2015, where people were all against driverless cars. Everybody's always negative on new technology. Oh, the internet's going to destroy everything when it first came out. I mean, imagine the guy who had the horse and buggy whip telling people that you don't want to get in that automobile. It has gasoline. It's going to explode. You're going to die. said the next person who said, I'm not getting in that airplane. You crazy?
Right.
So things just tend to happen. And then what really, I think you and I just were caught off surprise. You said to me one day, you know what you did? I'm like, no. Well, NVIDIA's become the #1 gaming chip. I'm like, oh, cool. And that's when the parabolic started to happen. And then guess what? Then it became the premier chip for mining Bitcoin. Right. Now it's one of the premier chips of AI, at least at the moment. So this has just become something where, imagine when you and I were talking about this going back to 2015, it was a company that should have been selling at $100 a share that was selling in the 30s.
Yeah, and now that's changed significantly. And you mentioned that a while back. I think you told me when you were back on the show in 2015, saying, "Oh, it's $30. I think it's gonna go to 300." I'm like, "Okay, Larry, but put the pipe down, buddy." But here we've not only hit 300, but you're almost $1,200 today. And I'm sure that you have gone through and reevaluated and seen their numbers change. You've seen the growth rates, and of course, that's why you're still keeping in that portfolio.
Yeah, look, at this point right now, what's their bad? I mean, you just said it earlier, 78 cents a share. It's Warren Buffett. Why do I have to worry if Nvidia is going to drop? Yeah. Seriously, right? At $78 cents a share right now, come on. See, that's what Warren Buffett figured out with Charlie Munger. If it's a great company, it's going to be a great company. If all of a sudden we start to hear a lot of negative news about the company where things are starting to kill people, that's a different story. But when you're looking at a company like Nvidia right now, which is clearly innovative, I mean, they're kind of teasing there's going to be a first $1 trillion company, that's going to be a $1 trillion man or whatever. And I don't know. I think Nvidia could be giving, Musk and even some of the other companies a run for their money right now because they always seem to be at the right place at the right time, don't they?
Yeah. To that point, you mentioned, and once we get to the June 10th split, the dollar cost average on that portfolio position is 78 cents. To Liz's point here, he says, where's the stop loss on that? Because I'm sure as heck that you're not going to say, oh, well, we've split adjusted. We're now splitting. It's $140 a share. My dollar cost average is 78 cents. There's no way on earth you're going to let it get to 78 cents. So there must be some stop loss mechanism in here, capital preservation.
Not necessarily. Why? If they're paying a dividend. See, again, Warren Buffett didn't have a stop loss theory. Warren Buffett's been holding Coca-Cola stock since the 1980s. He's collecting dividends. So again, I think you really nailed it on the head. And I'm sorry, who was the person that asked
that was
the
from
question?
Liz.
Hey, Liz, how are you? The real question becomes, at this point, why do you want to pay capital gains? Or why do you want to pay any type of long-term tax on things if there's no reason to necessarily do it? But this is not trading. It's not even a way that what we're doing with kind of wealth and retirement investing. This is a company that you want to own forever because you love the company, you believe in what the company is doing. Now, if all of a sudden their chairman left, because I'll give you a perfect example of this, if I can just divest for a second, Merlin, Lululemon was an interesting case study, and Lululemon also got on my radar very, very early on. I just honestly didn't pull the trigger on it, and I'm bummed I didn't at the price it was at. But what was fascinating was they basically had to drive the founder out of the company. The founder was starting to hurt the company. They started to outsource their manufacturing into China. You may remember a few years back, it was like 10 years ago, the women's material was ripped in places it shouldn't be ripped.
Was it ripped? It would just stretch to transparency. There's a fine line between ripped and it would just get so thin you could see right through it. Not fun at my 24-hour fitness, I'll tell you that.
No, and on top of that was also the fact that, they were having problems where China was becoming unreliable. And they found themselves kind of like we are in the manufacturing of chips right now in Taiwan, that if something is to happen, it could really disrupt the whole chain. And they brought in a new chairman and he turned the company around. And when I was looking at it, believe it or not, that stock was selling at $60 a share. I don't know if you want to bring it up. What is it at today?
Lululemon?
Yeah.
I'll bring it up here.
And it was at $60 a share when I was looking at it. I just didn't.
It's actually been tanking significantly. It was up over $500 a share. Now it's only $298.
Okay, but the point being at $60, and you have to kind of look at this and say to yourself, and Liz is not wrong. I mean, at some point you got to say, do you want to take somebody off the table?
Right.
I could do trailing stops off of trend. I mean, I'm looking at monthlies. I'm not looking at daily 60-minute charts or weekly charts. I'm looking at monthly charts as well because it's more of a longer term play. And, everyone kind of threw in the towel on Nvidia. Remember a couple of years back, oh, this is the end. And now look at it. So I'm not going to necessarily say at this point, yay, nay, but I would say to the person who's invested in it, you need to have a number you feel comfortable with it at, and that should be where you're willing to take money off the table.
Yeah.
It can't be just a reason because it's gotten too large. If that's the case, I can promise some of you right now that you'd be kicking yourself because, by the way, I kicked myself. I didn't know. Do you know that, Merlin, in the year 1982, you could have bought Berkshire Hathaway shares for $500 a share, and they're now $500,000 a share. So this is why we get really kind of bent on large numbers. And if we just chop some zeros off of it, people wouldn't be as concerned. Yeah. So you really have to look at it from their growth. And as long as I'm seeing this kind of growth in Nvidia, there's no reason to say, let's pull the plug right now. But that could change.
You still bullish on it? You still think it's got a lot of legs to go?
I would like to see it pull back a little bit, to be honest. I'd like to buy a little cheaper. But again, it's going to be very interesting. You know my stance on splits. I am very against buying on a split. In fact, if you want me to defer into that for a moment, I could.
Sure.
One of the two biggest ones that I found were the most advantageous for me at the time was Facebook, believe it or not, and Berkshire Hathaway. Because what I figured out was, if you recall, all those years back when Facebook went public, it was one of the worst public releases ever, one of the worst IPOs ever on the planet. Remember it? They had to shut down trading. It was such a disaster. And a friend of mine was like, why aren't you buying it? It's like $60 a share. And I remembered listening to a lot of other people who are much smarter than me saying, the banks and institutions can't do certain things for a certain period of time until the IPO is released.
Right.
And so what I did was I just waited and I bought the Facebook shares at $23 a share. And what I've now come to realize is, and you saw it actually with Baba. Remember when Alibaba came out, it jumped up to 100 and then they slammed that thing back down?
Yep.
The sellers are going to come in. The banks and institutions are going to punish the people that were greedy on a split or an IPO. And then all of a sudden, there's going to be this great price that they want to buy it at. Same thing happened when Buffett split the shares 50-1 to buy the railroad, back when he split his B shares. And he was a reverse split at 50-1. And I waited a little bit past that too and was able to get it cheaper than even what the split price was. So understand there's a lot of manipulation going on. A lot of people are trying to get rich quickly. Just follow the core strategy. Yeah. Just look for those really good zones and get in when you feel it's a good time for you to get in.
Ricardo says, Bashir's focus class, value investing is awesome. Absolutely. I concur. He's really good at what he does. Very disciplined, very structured. And I think that, you look at what Larry does and a lot of the guests have had in the program, the key to success is just discipline, routine, and making sure you follow the same rules and don't deviate every trade that you make. And Bashir and Larry are good examples of that. All right.
Well, yeah. And Bashir's great because I know I got a chance to help Bashir a little bit with that class. Yeah. So I love what he did with it.
Yeah, it's really good. All right. That was a drum roll. I don't know if that just ruined everybody's microphone. Sorry for the smacking my desk like that. So what is it? What are we looking at today?
Okay, bring up symbol PUBM. PUBM.
PUBM. PubMatic, huh? I love to go into the pub. This is my kind of company here. Is it a beer outlet? This is, you're finally going to get my support on one.
Actually, believe it or not, like I mentioned, they remind me a lot of Trade Desk.
Okay.
They are basically providers in digital advertising technology. And we're going to start to see this market, I think, morph and change a lot now, especially what's going on with AI. You're basically as a platform helping publishers in terms of supplying digital ad inventory. They're managing their inventory. They're selling high percentage of inventory. So you're going to start to see a little bit more of a shift from what was traditional. We talk about advertising, which is all but dead. I mean, there are not a lot of people who like to go, hey, I can't go into another magazine business again. Mm-hmm. You're starting to see all these people that are out there with affiliate marketing sites. They're starting to build their own advertising sites for other companies. And this looks like it has a lot of potential. And again, when I went back and studied this company, and it started to have all these different advertisers and ad agencies that they can work with directly as intermediaries. All of a sudden, it's starting to give a lot of growth in the overall digital advertising area. And what we're starting to see right now is more publishers and advertisers are starting to adopt this programmatic buying and selling, which has been driving the success of the company and attracting more inventory. So they're a company out of Redwood City, California.
My neck of the woods.
And when I basically started to look at some of their numbers, and you're going to have to go ahead and kind of bring up Yahoo Finance for me.
All right.
What I've been able to see, and I'm looking at things, is its growth. So I'm going to kind of read a couple of things.
Just tell me where to go navigation-wise, and I'll bring up the page for you. So you're on.
Yeah, so right now it's basically the statistical stuff, but I'll just kind of let you know, and we'll take a look at balance sheets and all that stuff. Here's something that's really kind of interesting to me, okay? That their historical earnings growth, you ready?
Yeah.
Is 40%. So
phenomenal.
All of a sudden, that's what I'm saying. Wow, I was pretty shocked by it. And what I'm starting to see here is that they're starting to see a lot of growth, and it's kind of fallen through the cracks. It's a brand new industry. The same thing happened with Trade Desk. And right now, fundamentally, from everything I'm looking at, it should be trading around $131 a share. Right now, if you were Warren Buffett, if 50% margin would be $65. It's trading around $24 a share. And it's been beaten down. But if you notice over the last several months, it's been starting to rally again. Have you noticed that?
I have. I'm just putting the line on the screen here. It's well off the charts. But yeah, it's been, I mean, it goes back to what my criteria for buying into something is a series of higher highs and higher lows. And that's what we have going on since, October of last year.
Exactly. And I think that based upon fundamentals, and again, I'm not predicting anything. I could see this kind of turning into like a $500 stock.
Whoa.
Again, let's just face it. If it got back to where it was and where it should be trading at $131, That'd be a pretty nice rate of return, wouldn't it?
Sure,
Right?
absolutely.
At $23 right now a share. So when I see something like this, what I do want to share is how I could trade something like this right now. So if you look at its balance sheet, you're going to notice that over the last several years, it's been improving. Their earnings have been improving. They're starting to beat their earnings announcements. So those are the kind of things I'm taking a look at. I can't see your screen, so I'm going to have to just have you
I'm on the statistics page going under valuation measures, but on the left-hand side, there's the tabs if you want to like direct me.
Yeah, it should be something that talks about earnings. Yahoo Finance has kind of redone it. So what I might do is bring it up here so I can kind of
Okay.
drive it and tell you where to go. Give me a second to bring it up here.
I've got
But
the
what I
balance
was
sheet up here. So
noticing, what I don't love anymore that they used to do, and I used to love that one little diagram on Yahoo Finance. Remember that talking about would show you the balance sheet increases with income and everything.
Yep.
Well, they killed it. Again, they always have to think they're modifying and making it better, but not for us. And so if you go to, and I want to say, give me a second to look for it, might be statistics actually. Let me go to statistics on the left.
Yep.
Yep.
Yep. Statistics. Yep.
No, it may not be that one.
It's under financials. You're looking for the balance sheet, right?
No, I'm going to go there in a moment, but there's something they just added, which is kind of cool. I just got to see which one it's under, and then you can bring it up to show everybody. Let me see if this is.
They're always trying to get me to upgrade. Nice little. You want this data over here?
No,
You
there it
gotta
is.
upgrade.
Go to analysis. Go to analysis.
All right.
Okay. And what you're starting to see now, if you scroll all the way to the bottom, okay, all the way to the bottom right now. Okay, forget the whole analysis, price targets, and recommendations. I don't care what they have to say. Look how they've been beating their last several quarters.
Yeah.
They missed Q2 in 2023, but they've been beating their quarters ever since. And so to me, what I'm really interested in right now is now this is starting to get some legs because with everything that's starting to happen with AI, you're starting to see there's going to be a pivot in the way that people are marketed to, they're advertised to, and this company has already kind of positioned themselves as an inventory leader, and they're up already 40% in the past. And if you take a look here a little bit higher, look at the growth estimates. Okay, now I'm not saying these are accurate, but they're predicting 67% growth over the next 5 years. In the next year, they're looking at 82% growth. And in the current year, they've already grown 43%. I don't know about you, but in this current market phase right now, that seems pretty nice, doesn't it?
Yeah, not bad.
So I got my attention to want to go back and do some of my own analysis. And that's where I was factoring in that the stock should be around $133 a share, and yet it's only trading around $24. So this is not a recommendation, ladies and gentlemen. This is just me doing something I love to do, is find these companies and see what could happen. You know, you never know. And this is another one that just caught my eye the same way Trade Desk did. And I saw how that one really took off in 2017. So those are kind of some of the numbers here. So you can come into the analysis tab. And if you go to the financials just above it, Merlin, see now I'm kind of going around with you.
I'm with you.
And go over to say balance sheet. You know, I hate the income statement.
Right.
You go to the balance sheet, and I like to scroll down and look at where is it now? Common stock equity. Look how this thing has been growing since 2020. You see that? And so that's the equity coming back into us as investors right now. And the other thing is, look how low their total debt is. You know, the debt is pretty low.
21 million.
So yeah, these are kind of things I'm really looking at going, that's pretty good comparative to looking at their working capital right now. They're doing pretty well.
Yeah.
They've got good investing capital. And so these are the kind of companies that start off, people aren't paying attention to them. And then all of a sudden, the news outlets get it. And by the time they get it, it's too late. It's kind of like what you always tell me, Merlin. By the time it gets to people wanting to buy one of these cryptos, it's too late.
Right.
They're late to the party at this point. And so, you know, I will be the first one to say my biggest blunder with you was you begged me to buy Bitcoin at $300 a share.
Hold on a second. Let's be clear. I don't beg anybody to buy anything.
No,
I was just like, hey, you want to check this out? I don't beg on anything.
But I'm just saying you were so good at trying to get me outside my comfort zone, and I didn't budge.
Yeah.
Now I look at saying, I'm just not going to make that mistake again. If somebody's coming to me who has a good idea, I'm going to listen to it. I don't say yay or nay to it. I have to make my own decisions. But it was fun kind of coming in here and taking a look at something that I've looked at and haven't seen something that's as good. So what I can do is share how I might go about different ways of wanting to acquire the stock right
Okay.
now, if you want me to go down that path. I've
Sure.
never really done this on the show. So
Let's
I
do
can
it.
share some ideas with you. Okay. And you want to kind of control, you can kind of or put up a notepad and put some things down. We can kind of talk through it. But what's really going to drive my initial decisions is going to be this trend. And so you can see there is supply up there, but I think there's a lot of room for this thing to keep moving higher. So the first thing you can do outright is just buy the stock. Now, if I'm going to buy the stock, like I mentioned, I'm in it for 3 years. So all of a sudden, if it pulls back, I'm not looking at stop losses the same way. I'm looking at a monthly chart, and this might take a while to grind up. It might take a while to grind down, but it's something at $23. And my goal is always to say, put in 100 shares, buy a lot.
Right.
Buy a lot of shares if you can, 100 shares. So that's about $2,300 of an investment. I hear you talk all the time that you have a fund that you do, which is your very speculative fund. So this to me would be something that would go into that type of a speculative fund. Thinking back now with Nvidia, imagine just putting $3,900 into buying 100 shares or $39,000 into buying 1,000 shares back then, right?
Yeah. Well, you know me, Larry. I'm a skeptic of saying should have and would have and could have. Because if that's the case, I would have put $1 into Bitcoin in 2009, and I'd be worth $100 billion today. So I can't make. Yeah.
No. But when you had a feeling about it and you did your research and you felt this was right, I know you kept going all in and kept doing things. So again, it's always speculative. But my point is just saying you can buy the stock.
Yeah.
Right.
Right. So buy it out. Right. Yeah.
Right, just buy out the stock right now. The second thing you could do is buy options. And you can do what I like to refer to, it depends upon your risk factor. You can do a short-term leap, in terms of going out a year. You don't have to go out a full 3 years. If you want to do it kind of the way I might do it, instead of buying the stock and holding it for 3 years, you can buy the option and hold it up to 3 years.
Given its liquidity, does it have much in that regards? I mean, you've got like 280,000 shares averaged a day. I can't imagine the options are that liquid.
That's where you have to take a look and see what the liquidity would be on an option. I'm just giving you different ways to approach it.
Yep.
And if the liquidity works there, then bottom line, what you're really doing, believe it or not, is you're buying time. It means that I have X amount of years to save up to buy the 100 shares of the stock, because the longer I go out in time, the bottom line means that if the stock keeps advancing and going up, then I have the right to buy it at the price that I originally put the option on for. So going back to thinking Nvidia, if you had bought a $30 call and did it for 3-year leap, you'd have the right to buy that stock at $30 a share 3 years into the future. So I kind of like the idea of looking at leaps if maybe the price of a stock is a little too expensive. So that's kind of my second one. The third one is right now, if you want to use demand supply, sell cash secured puts. Right. If you don't feel it's at a price you want to own it at yet, then sell calls. I'm sorry.
Sell puts.
Sell puts at the price you'd be willing to own the stock. Buffett did that for years. If he found something he liked, but it was still too more expensive than what he was willing to pay, he would sell the puts and he was fine taking ownership of the stock. So right now, if you're looking at the chart, you say, hey, if it got a little bit lower again, I'd be interested in it. Then you have to be okay. If it never gets there, then you're just selling puts. And that's where I'm thinking of Lululemon. I wanted it around 60. And I remember someone talking me out of it. And I'm like, well, I can just sell puts at 60. And someone at that time I was learning from was like, no, you really don't want to do that. I'm like, okay. My fifth thing is that if, let's say you buy it and the market does go down, right? Buy puts. I'm sorry, buy long puts. Buy puts against it, right? What I could be doing right now, that's kind of my fourth thing, is that if you're really worried about the market kind of turning, there's no reason not to buy puts on something that you love, right? So all of a sudden, as the market starts to go down, you bought puts as protection for the market going lower. But again, it would be a time that you actually own the stock.
Correct, right.
And then finally, which is not my favorite, but it could still be done if you wanted to buy protection. This is the only one I'm a little nervous about, is you could collar the stock. And the only problem with collaring the stock is that if I wanted to sell the call to raise enough money to pay for the put, so it'd be like interest-free insurance, right? I would have to then be willing to have to sell the stock at that call strike. So that's why it's always not my first choice. But if, let's say, you were interested in selling the stock anyway, if it got to a certain price, sell calls out there, and then you can use that money to buy your protection in case price went lower. So those are kind of different ways that I'm always taking a look at how I might be able to manage these type of things. And so hopefully that helped the audience and gives you some ideas that you don't necessarily have to jump in right away and buy the stock.
I like it. Yeah, leaps aren't for 3 years, as a correction. When there, someone's leaps are only for 322 days, not 3 years. It definitely depends on which security it is, but 3 years would be a little too long.
Well, you can get up to 3 years. I mean, for example, I remember you could go in there and, again, I'm sorry, I can go to January of 2025, 26 right now. Again, the reason for doing the leap is it's cheaper than buying the stock straight out, and you can save up money instead of having to buy 100 shares of the stock.
Yeah.
So I'm using it for that purpose more than even saying, oh, I want to own this for 3 years. It's just now I got 3 years to decide. And anytime in that period of time, I could exercise my right and get the stock at the price that I wanted to pay for it originally.
Very nice. See, a lot of that stuff, it's funny, as he's talking about all this, guys, a lot of it's out of my comfort zone. So again, this has to be something that you're familiar. Well, it's just going, I don't do leaps. So leaps is not my thing. I don't grow long term, talking about the collars and things like that. So I don't do that as well. But some of those strategies certainly would be a way for me to acquire it. Now, I'm not saying PubM is attractive to me. I like your analysis, but maybe not. But, there's certain things out there that you've mentioned in the past. One that someone asked about here earlier, which was Fortinet, right? You were a big fan of FTNT, which is, I've actually made some good money on Fortinet trades. They're tanking right now, and this is something that I'm actually thinking about potentially selling some puts against it as well, and maybe buying at a lower level if that premium is there. You look at this chart here, Fortinet's been on a pretty ugly slide for the past couple of months, and maybe you get down to that $50 mark, I'll be happy owning it. Of course, I have to look at the prognosis for the future of it, but I'm definitely a fan, as viewers here know, of selling puts, collecting premium, and if it gets there, awesome. I'm stoked on it. I'd be happy to own it at that specific price, and if the PUBG fits those criteria for it, then go for it.
Yeah, and remember, guys, prices are going to go up and down. It's not like, unless you're basically at a crash. See, that's where it's going to be really awesome. I cannot wait for a crash like 2009 and do my analysis and buy those stocks that really were beaten down in the beginnings of a new bear market. You're looking at different things at different periods of time. You've got to determine how long you want to own it for. Your rules will be your rules. And again, like I mentioned, this is not me saying you should do this or not do it. Things come on my radar. They're things that I like, things that I don't like. What I care about at the end of the day is that there's more money in the account than the money that's being lost. And that's kind of the value investing game.
Yeah. Well, and there's always, moments arise when you get just amazing deals and great value out there. I mean, you could talk about Warren Buffett's purchase of Bank of America when it was down around, I think we got down to almost $2 a share on that thing when he started doing all these warrants and crazy deals. But yeah, there was a time where I was looking at that chart going, man, it can't go any lower. But my gut was like, this could go to zero. And I talked myself out of certain investments. But yeah.
Absolutely.
What else? The pandemic was a good buy. No, it was if you thought it was over. As you guys that follow me for a while, I didn't think it was over. I thought we were going to have one more leg down. And I thought it was going to be a sharp leg down, and it just never came, unfortunately. Because, again, having 420 puts on the S&P would have been a nice winning trade if it worked in my favor. It did for like 3 days. I think at one point it was up like $40,000 in the position, but then just took off from there and ended up being a almost $70,000 loser. Gotta love that about face. Oh, the options world. Larry, I saw a question from, I think it was from Chio here. I know you are coming out to California some point in the near future. He says, could you ask Larry when he will be teaching core in Irvine? Are you teaching core in Irvine?
No, I'm not doing core. I'm primarily just doing options right now. And of course, I'm doing my focus class, which I do weekly now. So that's kind of above and beyond the normal curriculum.
Nice.
Yeah, but no, I'm teaching options when I go back to Cali. I'm not really doing the core classes.
Oh, Larry, you got to get in that core class. It's the foundation, man.
But see it, you're now teaching course. And
No,
that's
no, I'm good. I'm good. I taught two of them. It's enough for me, man. It's tough. Standing in front of the students that are watching this right now, you have to appreciate the instructors that stand in front of you. It is so difficult for me to walk into a room of, let's say, 30 people and know that 5 people had a hard time even brushing their teeth this morning. They're just there. And then you have 5 who are like super scientists, engineers, nerdy. They're going to question every single word that I say. And you have all walks of life in between. Some people don't know how to move their mouse. Other people built the damn mouse. And it's like getting everybody on the same page, on the same topic, whether it's a supply zone, demand zone, option strategies, is an unbelievably challenging task. So I like going in the classroom every now and again, but man, sometimes it is a challenge. There was one exercise I did, Larry, where I went around the room and I tried to show everybody how to draw just lines, a horizontal line. Draw a demand zone or draw a supply zone. Your pick, and I'll come and help every single one of you. It took me over 3 hours to get around the room one time. That's tough.
Though I take a different opinion. For me, it's always been when I see that spark in someone's eye, I can't describe it, but it's almost like the sparkle just pops like an aha moment. That's what I love about teaching, because there are people who believe based upon their own belief system, their comfort zones, their fears, that they can or can't do something. And that moment when there's something just happens, it shifts. And for me, it was slower. For some people like you, it probably was faster than me, but it took me about 2 years because I didn't have internet when I first started to trade. I'd never looked at a chart. It was just a total new foreign language to me, and it took me a little longer. But once it happened, man, it changed everything. And so I once saw this great quote. I love it. I wish I knew where I put it, but it says, too many people are all they want to do is dig for gold, but ask how much the shovel costs. And I just thought that was such a great quote because it's so true.
The short-sightedness of it all.
That's exactly.
Let's see. Question came through. This is an interesting question. Okay, so we've got thousands of different securities to choose from. And, you've got your Texas Roadhouse, your Nvidias. How did PubM fall into your lap? Like, how was it that you said, let me check out this one? What was it that you went, that's an interesting. Was it a recommendation? Was it a Jim Cramer pick? Because I know you thrive off Jim Cramer's picks.
No, you know what? I do a lot of reading. And so every once in a while, I'll see an article that might interest me. Sometimes people will say something, but it's cryptic. And I like to be forensic and kind of dig in and start looking at different companies. That's how the whole Nvidia thing started, was people were talking a lot about driverless cars. I'll give you one that just kind of blew me out of the water. I'm going to share with you guys something that I wish I had found a day earlier. So bring up the chart, BLDR, Builder
First Source.
Have you ever heard of that company in your life?
Never heard of it.
Right. Guess what? By going into the platform, OTA Trade, and this is what I've been kind of doing lately, ladies and gentlemen. I like to go to the S&P 500 watch list in OTA Trade, and I'll sort it, and I'll look to see what comes up to the top and what comes up to the bottom. And yesterday, out of the blue, the DLR popped up and had a huge move to the upside. So I brought up the chart, and I'm like, Merlin, would that have not been the most amazing short at that moment?
It would have been. I don't know what criteria you would have for the short because it's at all-time highs, but yeah, I mean...
No, but what I liked about it was the fact that it's in this downtrend right now. We still haven't gotten back to what I could consider quality demand. Still got a way to go. It might have been another final retest where you could have bought bear call spread, non-directional bear call spread or bear call spread. And I think it's got legs to hold up to that last little supply area it did. And we'll see what happens. But look at the move that it made just the day after. I haven't had a chance to look at it today, but yesterday was a big sell-off once we tested that supply area again.
Now you're down another 4% today.
There you go. So I'm just telling you little things that you don't expect. It's about just being be an investigator. I guess that's the best word I could say. Look at things, read a lot of things. I'm always listening to what's going on, not in the traditional media news. But I go out to different sources, and I'm just curious what they're talking about and what areas might be impacted now by AI. And a lot of people are out there right now trying to build their own AI related marketing companies. And just think about it. If you have all these traditional companies out there and they don't know how to do any of this, imagine setting up your own business where you're building websites or doing AI marketing and sales for them. It could be game changers.
Yeah.
So that's the kind of stuff I go out and look at. And that's how PubMatic got on my radar. Was I was reading an article and I just started doing some research, and then I start looking at it. And what blew me away was when I went over to Yahoo Finance and said, what? 40%? And then I just brought up the chart and I started to do a little more digging. And that's kind of how these things kind of pop up. And Texas Roadhouse was just kind of a pleasant accident. I went to dinner with somebody at Texas Roadhouse and they started mentioning to me that, yeah, it's like the biggest craze out here. It's even bigger than like the Palm or Ruth Chris. And I'm like, Texas Roadhouse? And I remember many years ago, I did really well on Buffalo Wild Wings. And so every once in a while, restaurants do well. And it just happened to be Texas Roadhouse's time right now. And that's how I got it.
All right. Love it. Yeah, it's funny how you kind of talked about how they come on your radar. You hear things all the time, and a lot of times, I'm going to relate it to crypto because most of my long-term investing is done with crypto. The shorter-term stuff, I'm pretty much a swing trader. Trades for me last days to weeks, maybe a couple of months, but I'm not. I don't apply what Larry uses for stocks because I'm a skeptic, and I typically don't trust these markets. I don't trust earnings. I don't trust balance sheets, and you have to accept the numbers that you're seeing on these balance sheets to make trades like with PubM or Texas Roadhouse or things like that. So that's an important distinction here. But when I look at cryptocurrencies and digital assets, I am doing a similar piece. I'm looking at, are they a real project? Are they really building something? And everybody's a critic. Everybody's throwing things out at me like, hey, check this one out. Check this one out. This one's great. This one's great. 99% of them are trash. I wouldn't touch them with a 10-foot pole. And I think you probably go through a lot of ugly ducklings before you find your Prince Charming.
Yeah, and right now, I don't know if PubMatic's an ugly duckling. It might turn out to be.
Yeah, right.
All I can do right now is it's in an interesting area, an interesting field right now. I'm liking the number growth that it's having. I'm liking that it's moving the needle in the right direction. I like that the stock has been beaten down and might be in its upturn at this point. And like I said, if it's something that's usually should be trading around 130 and it's down around 23, but it could go lower. So the question becomes, are you comfortable enough taking a risk chance at it? And to me, it's no different than anything else. If you can afford to take the risk and you're willing to do so, and it's for the right reasons, then do it. And like you said earlier on the show, there have been a lot of things that have worked right over these years. And what you and I have been looking at, there's been a lot that hasn't.
Yeah.
And so you just have to kind of look at them one at a time, stick to your rules, and eventually make the right decision and decide to keep with it or let it go. And you just got to keep using the same litmus test, so to speak.
Yeah, I think the big point is setting those rules, that foundation. And without a doubt, in that portfolio, you're going to have some duds, right? You have some that you thought were great, and they're going to fizzle out, and they'll eventually drop out of the portfolio. And that's why you don't ever go all in on anything either. Right. You said something initially, which I thought was interesting, and maybe I'll just kind of parlay on that one, and then we'll wrap up here because I don't want to take up too much of your time. But you mentioned no biotechs. And I know why I don't do biotechs, because I have been kicked in the teeth way too many times. It doesn't matter which direction I go. Like, I'll go long some biotech stock, and they miss phase 3 drug approval, and they drop 99%. Oh, dang, I lost. Or I'll go short something because the fundamentals are atrocious, and all of a sudden, Pfizer comes along and buys them for a premium of 800 times their earnings, and I lose tons of money that way. So I don't touch them because of that unpredictability. What is it that's caused you to say, no biotechs in this portfolio?
It just haven't worked for me. I just, there's a couple of stocks, like you have your stocks. My two stocks I can't stand. I hate Adobe and I hate Amgen. I can't trade them, but I love trading Apple. So it's just something about the way you analyze it or some of the way you kind of approach certain things. It just doesn't sit right for you. Mm-hmm. And I've just found recently that the ones that I've kind of thought would do really well in some of the medical fields haven't. But then there's like an REGN, but it's in a whole different way than some of these other companies are doing. So I just saw a buddy of mine many, many, many years ago. He was into the whole thing, the .com era with biotech, and he got wiped out wiped out, like lost everything.
That will
And I
happen.
realized that there's speculating and then there's like crazy speculating.
Yeah. Well, there's speculating, and then there's holding on to a belief system when it's a false belief system. You're like, oh, cannot go down. And yeah, it can go down further. Trust me.
It can. And you know what? And that's why if you always are unsure, don't risk the money you can't afford to lose. That's why sometimes the options are a better bet to start with. It could be cheaper stocks, but when you start to realize this could be a new industry, something that could be big, I just will look at it and say, it's worth a shot at it. If it doesn't work, it doesn't work. But if it does, it could be something really cool. And then, then next thing you know, you have the next Live Nation.
Yeah, oh God, get out of here. Damn you, Live Nation. So your teaching schedule, what do you got upcoming here? I know you mentioned you're coming out to Irvine. I know you do a lot of online stuff, but any points you want to share with our viewers so they can get in contact with you?
One of the things I love doing every week, I have a great group of students in my focus class. I have been teaching students for, almost 3 years now, how to trade weekly options. It's not an aggressive approach. It's very conservative, and it's giving students new kind of tools in their tool belt. They might be interested in how to use options. And so I teach a class probably once, like you do, once every couple of months, but I have a weekly session with my students. Again, it's every Thursday night. And what we do is we look at a couple of the stocks that I really like and I know really, really well. And I teach the students my strategy that I've been doing since 2005, 2006. Can't believe it's been that long.
Yeah.
But it's been improving over the years. And so it's fun when I get to show things that work, that don't work. And I've been told by a lot of students that this has also helped them in their other trading as well. So that just excites me. I love just helping people like you do the best that they can do. And I want everyone to be successful. Like, why not? There's a lot of money in this world.
There's plenty for everyone out there.
Exactly.
All right, Larry. Well, hey, thank you very much. Thanks for PubMatic. I might go down to the PubMatic a little bit later on and celebrate your PubMatic post. I like that.
Kind of like the pub and the automat. If you put them together, the PubMatic.
Drive-through automat. I like that. All right, Larry. Well, hey, thank you very much. I always appreciate you coming on. I look forward to having you back on again soon, my friend.
Thanks, Merlin. Take care, everybody.
Take care.
Good luck.
Guys, that was Dr. Larry M. Jacobson coming on the program, going over a little bit of PubM. Thought it might be an interest just to see kind of some of his thought process. And again, I saw there were some people kind of, not nitpicking, but saying, hey, what about this? What about that? What about this? There's always going to be vulnerabilities to anybody's decision to buy or sell something. So, because Larry likes PubM, again, not a recommendation to buy it, but he does find it very interesting. I would suggest that anybody, if you're ever looking at it like that, make sure you put your stop loss in place, because there have been positions that Larry has looked at that have turned out and gone sour. Some went down like 70%. Can you handle that type of drawdown over a 3-year period? A lot of people cannot. So something to think about as you look at these investments. Sorry, I didn't realize that there's a screaming noise outside from my neighbors building a fence, apparently. Hopefully this house will be done very, very soon, and I won't have to listen to any more sounds coming from next door. Okay, let's talk about earnings. So you had today the CRM, Salesforce came out with earnings today, and I want to check out that one before we wrap up here. Salesforce was not looking good. Here's CRM. I like Big Eb's thoughts on this one as well. You see the chart right now looks fine until you turn on the extended hours trading. We'll throw on a 5-minute time frame. Boom, getting slaughtered in the after-hour session, down about 16%. And the reason I'm of interest of this one as well is I put a red line where we are currently at, and notice where it lines up on the daily time frame, right? Where would I be looking to buy this personally? At the origin of this giant gap up here that started back on November 29th. And all of a sudden, we find ourselves right there. So tomorrow morning, I actually really like Salesforce. I think they've got a great business model. It's like lock in customers and just charge them a ton of fees, and all their data is stored with Salesforce. You're trapped once you start using Salesforce. The question is, do I think it's going to crater even more? Their earnings were good. They actually beat earnings. Let me see if I can bring it up for you guys here. Let's go to Salesforce earnings. They beat earnings today by 6 cents. They were supposed to make $2.38, came out at $2.44. Yet they are down 16%. So they're getting crushed. The question is, I'll have to look at it later tonight if I have some time, is this enough of a drop, or will there be further drops? Do you see this thing drop all the way down to, let's say, 195? So yeah, poor guidance kills. But again, Big Eb, I'm a believer that poor guidance is a tool used by all companies to lower the bar so that they can beat it next time. right? So it's like a high jumper going, oh, no, that I can't do 6 feet. I can only do 4 feet. When in their minds, they know they can do 5 feet. So they drop it to 4 feet and all of a sudden, hey, we beat it. So I think that guidance is always used as a trickery, sleight of hand magic trick by these, by all CEOs, CFOs. I believe it's wizardry, man. It really is. So it makes me think that this is an overdone pop or overdone drop on Salesforce. We'll see. And I may actually go and sell some puts on this one tomorrow. The question is, do I do it at the money tomorrow? Like if we open up somewhere down around this 225 mark, which is the origin of that gap, normally I would go much deeper. I'd probably try to sell the 210s or the 200s and get that fear premium for the puts. But if I think that Salesforce is actually going to rally, I could get some gigantic premium for at the money put options tomorrow on the open. We'll see tomorrow. I'll let you know what I decide to do on that one. It's a bit risky, especially when you're looking at a stock that's still at $227. But yeah, that was... Nvidia had great guidance. Yeah, based off the numbers for Nvidia, it's hard not to have good guidance, right? Money's flowing into them like, a strip club at a Super Bowl, right? You got all these a lot of money just flowing in to Nvidia. At some point, Nvidia is going to miss those guidance numbers. At some point. When? I'm not going to take that chance and speculate on that one. Right now, it's just like, it is the prettiest, shiny, flashy object in the water of the financial markets is Nvidia, and I ain't going to mess with that one. Maybe on June 9th, I will take a stab at it, but that's going to be a real risky play to buy some directional puts on Nvidia. What did it do today? It was pretty slightly up. There you go, Nvidia. Yeah, it was just barely up 0.81% today. But at some point, I do think you'll see some profit taking, although that June 10th deadline for the split looks really, really good. Yeah, exactly. Oliver says, Nvidia is in God mode. Yes, it is. It really is. Liz says, I'd like to see what it does overnight and then make a decision tomorrow. Sell a lower out of the money and collect some premium. Yeah, exactly. I agree, Liz. It's certainly not going to be something I'm going to do right now. Obviously, the markets are closed unless I want to just buy Salesforce immediately, but I'll wait until tomorrow morning. I think there's going to be plenty of opportunity on Salesforce tomorrow morning. It can be an exciting one. For tomorrow, you also have, let's bring up the earnings counter for tomorrow because that's a good one. You've got Costco, one of my favorite companies on the planet, reporting earnings tomorrow after market close. You've got Network Appliances, the terrible company, which I still hate to this day, Best Buy, BBY reporting earnings. You've got Dollar General, Ulta, Marvel Technologies. You've got Kohl's. Kohl's was not looking so good here. Kohl's looked like it was on a pretty bad, sideways to down trajectory for the past few years, but at least it's kind of based and gone sideways. But Costco, it's hard to beat that chart right there. That is just a gorgeous looking chart. I mean, just think over the past couple of years, this thing's up over 100%, and largely due to my purchases of goods and services at Costco. I'm there all the damn time. All right, and finally, from your economic perspective, we'll look at the economic calendar for tomorrow, and then I'll wrap up here because I'm unfortunately going to make an hour show. I did not want to do that. Here is your stuff for tomorrow. You got preliminary GDP, pending home sales, natural gas storage, crude oil inventories, a lot of different stuff going on tomorrow from a macroeconomic announcement. Yes, Liz, I did see Abercrombie & Fitch. They beat earnings and were up, if I remember correctly. They had a pretty big jump on A&F. They were up 22%. They were reported this morning before market open, and they were up 24% on the day. Crazy. Abercrombie & Fitch, really? Like, I'm fighting every urge on my body to load the boat buying directional puts on this one. I just don't see Abercrombie & Fitch being this great of a company. To me, I don't like the stuff they sell. B, their profit margins can't be that great. It's not like there's a line out the door at Abercrombie & Fitch every single day when I walk by the mall. So, yeah, that one's pretty crazy. I will leave it there, but yeah, that's probably the craziest chart I've seen this year has been Abercrombie & Fitch. It just doesn't make any sense to me. Anyway, that's going to do it for me, guys. It's officially an hour show. I was not going to do an hour show today, but I hope you enjoyed that with Larry and just a little insight into what he does from a long-term perspective. Of course, he'll be out in Irvine teaching an options class here. You can find out more information about any of his programs and teachings by going to tradingacademy.com and just researching there and finding out more information about Larry. So that's going to do it for me, everybody. I will see you all mañana for our Thursday show. No guest, no topic planned. So if you have something you want me to discuss, let me know. Go to TraderMerlin@gmail.com. Email me there. Let me know if there's a topic, something you want me to cover. And I've gotten a bunch of good ideas from you guys recently. Thank you, Ricardo. You sent in a bunch of good ones. And you can also put your comments down below any of the YouTube videos. Just remember, I'm not going to subscribe or to sell you anything on Facebook. I'm not trying to manage your money on Instagram. I'm not trying to, get you to buy stuff on WhatsApp. I'm not contacting you directly, people. So please, there's scammers. There's a ton of them out there right now trying to get people to fall for whatever TraderMerlin, spelled incorrectly, is trying to sell them. I'm not selling anything. Spread that word. Don't be a sucker for it. I will see you guys tomorrow. Take care.